Good afternoon, everyone. It is my pleasure today to be sharing my thoughts and ideas on this amazing topic today, bite-sized finance for youth. The average age of India is 28.4 years. As per Digital India report, only 24% of India's population is financially literate. As per World Bank's Global Fintech data, India is among 7 countries home to half of the world's 1.4 billion unbanked adults. On the other hand, if we look at India's growth story in terms of digital finance, as per the Barclays Rise India report, India has highest in the world fintech adoption rate at 87%, 1.26 billion digital IDs, 658 million internet users, 30 million merchants who use QR codes, and the digital lending and insurance sectors are expected to grow to $350 billion and $222 billion, respectively. One of the major reasons for this growth is the emergence of the new digital-savvy generation of Millennials and Gen Zs. The first generation to be born with smart devices in their hands, as per a recent report published by Nokia, a Gen Z spends on an average 8 hours online each day. Ironically, the adoption of smartphones is high in rural India as well. With 15 million Gen Zs entering the workforce every year, there is an urgent need to provide financial knowledge through digital tools. Bite-sized finance refers to finance on a small or micro scale enabled through technology, obviously with a deliberate pun on the word byte. The way in 1970s, single-use shampoo sachets of ₹1 each made it accessible and affordable for the masses. Sachetization and urbanization of financial products is important to drive education and adoption on a mass scale. Now, before we go into the details of bite-sized finance, let us do a quick reality check. Give yourself 1 point for every yes as an answer to the below questions. There are 10 questions. The first one is, do you use mobile or net banking? If your answer is yes, give yourself 1 point. Do you use credit card, prepaid card, or debit cards? Do you do budgeting of your expenses? Do you invest on your own in stocks, bonds, or mutual funds? Do you know the power of compounding and compound interest? Do you know how much insurance cover you have for yourself and your family? Do you make payments through UPI? Do you know about inflation? Do you have money conversations with family and friends? Do you know about microfinancial products? Now you can total up your score and see how much you have scored out of 10. And now let's look at the scoreboard. I hope no one's boat is sinking, and even if it is, there is no need to worry because there are enough digital solutions to make you touch the shore. So this is a reality check for yourself. Now, going forward, when I started my first job with HDFC Bank, my father gave me a valuable advice in the form of the golden rule of money management. 50-30-20 rule. Always ensure that you save 20% of your income. Spend 50% on your needs, such as utilities, groceries, housing, healthcare, etc. Do not spend more than 30% on your wants, restaurants, movies, shopping, etc. Well, at that time, I was a total spendthrift, and I still remember what I used to tell him, that it's okay, I'll earn more tomorrow, so it's okay if I don't worry about it today. Unaware, at that time, of life's uncertain ways in terms of recessions, marriage, even the pandemic. Even Warren Buffett advises, do not save what is left after spending, but spend what is left after saving. Now, let's understand some more about microfinancial products. Young people who have just joined their new jobs, or those working on part-time basis on stipends, for them, micro products are a great way to get started financially. I'm sure most of you would have used UPI either through Google Pay or Phone Pay or any other app for making small ticket payments. UPI by National Payment Corporation of India is world's best real-time instant payment system enabled via mobile interface. Now, when you buy goods on e-commerce sites through BNPL, buy now, pay later option, or when you open a savings account, a zero balance one digitally, or when you start a systematic investment plan online for as small as 100 rupees, or when you buy travel insurance on the go while booking your travel tickets, you are consuming microfinancial products made possible through fintech solutions and embedded finance technology. As a career banker, I had the privilege of launching 3 digital banks or neobanks or challenger banks in last 3 years. I'd like to share these 3 stories with you as case studies today. But before that, what are neobanks or challenger banks? Neobanks are nothing but digital banks without any branches. Neobanking started in UK in 2015-16 with Revolut and Monzo, then spread to Germany with N26, Chime in USA, WeBank in China, and today has millions of customers across the globe. In India, it started right at the time when the Indian market was ready to make the great digital shift during the pandemic. That was also the time when I shifted from banks to fintechs, because as Bill Gates says, banking is necessary, banks are not. NioX is India's fastest growing neobank for youth, which opened 2 million accounts in less than 2 years. It allows you to open a zero balance account in less than 10 minutes with virtual cards and even Forex cards without any charges. Most appealing for millennials working abroad or students planning to go abroad for higher studies. It also offers goal-based investments, thus making the expensive financial advisory services accessible to the masses free of cost. Freo is another neobank which offers small ticket size loans of as small as 1,000 rupees without any paperwork, digitally, instantly, based on alternate data. Lxme allows you to start your mutual fund investments with very small amounts and also offers financial literacy through app and community-based sessions. Thus, these challenger banks, by offering financial products in digital sachets, enable today's youth to gain financial acumen early on in life. Now, what are the 5 major reasons why youth prefer bite-sized finance? First is speed. Today's generation likes speed and wants everything on their fingertips instantly. With new identity verification technologies, such as eKYC, video KYC, biometric KYC, account opening has become instant, seamless, and frictionless. Something that appeals to this generation, which cannot even imagine that sometime back it used to take 3 to 5 days to open a bank account. Smooth user interface. Today's generation is used to using smooth and user-friendly UI UX on their mobile applications. So by providing similar interfaces, which they are used to on their delivery, social media, or e-commerce apps, fintechs are able to provide differentiated financial experience as compared to the traditional banks. Simplified finance. Fintechs go a step beyond just banking. The young users who will be managing money for the first time have little or no experience of money management. Hence, they look forward to simplification of finance, made possible through innovative solutions offered by fintechs, such as gamification or goal-based investments, etc. Even embedded finance is emerging as an attractive option for this generation, where finance is made available at the point of sale on non-financial applications, thus making the entire experience extremely simple and easy for the user. For example, the payment and credit options that you would have seen while using Ola Uber, or health insurance at the time of buying health checkups, etc. Specialized, personalized. Built on a stack of artificial intelligence and machine learning, fintechs are able to offer personalized rewards, price comparisons, loan eligibilities, saving and budgeting tips, investment and wealth triggers and plans that can enable today's youth to make informed, appropriate financial decisions customized to their needs. And finally, superior customer experience. Today's generation expects round-the-clock 24-hour service. Hence, fintechs, by harnessing technology, are able to offer quick grievance support through social media like Twitter, chatbots, WhatsApp, AI bots, etc. This makes them extremely attractive for this generation. I dream of a digital India where mobile and online banking ensures financial inclusion. Prime Minister Narendra Modi. My PhD thesis on financial inclusion and digitalization talks about how financial inclusion has improved in the country over the years through large-scale efforts and success of the JAM framework, the Jan-Dhan, Aadhaar, and mobile, UPI and other technological innovations, the entire India stack, and how a lot still needs to be done to ensure that the accounts opened are used continuously for savings, payments, and investments and do not lie idle or dormant. In my earlier TEDx talks, How Do You Live Your Legacy and Maintaining a Balance Equation, I have talked about several of my financial inclusion initiatives, and I still have a long walk ahead to achieve my goals. Financial and digital literacy is of utmost importance for youth to be able to take advantage of the newer innovations in this space. Hence, industry initiatives like the Fintech Olympiad by India Fintech Forum or the Svanari Tech Sprint by Reserve Bank Innovation Hub are great initiatives to bridge the gap between youth and finance. Thus, fintechs are revolutionizing the entire financial space through bite-sized digital microfinancial products, thereby empowering today's youth to become financially fit, financially free, and financially fearless. Thank you so much.